Risks have multiplied, no doubt, and there's been a convergence of these risks: generalized Chinese slowdown, the trade friction escalation, and at the same time, a continuous increase in the U.S. rates, and which obviously has led to the U.S. dollar also appreciating. All these have converged together. Consequently, we have turned slightly less positive, slightly less constructive than we were. We have reduced our MSCI Asia ex-Japan target by about 5% or so from the earlier. That said, I would reiterate that the tailwinds to Asian equities in the form of increasing ROEs and relatively robust earnings estimates, particularly in North Asia, they still remain. So I think if investors are patient and if they choose their stock basket judiciously, there's still money to be made in this region.
Manishi, what would you be looking out for, though, in terms of the next warning signs? And I'm curious if you're watching the yuan for those warning signs to any degree here, because when we did see it slip through 6.7, that certainly saw some impact in the equity space as well. What's your view?
Absolutely. See, there are 2 or 3 variables that we're watching very closely. One is, of course, how this whole trade friction rhetoric escalates going forward. Second, the currencies of the region, and particularly the big ones, like the yuan, as you mentioned. And obviously, there's a risk that the Chinese administration could use the currency as a weapon to counter the trade friction-related threat that they're facing. Third, we also have to watch the earnings season very closely. Asia, till recently, was still lagging compared to the United States, both in terms of growth, the breadth of earnings, and the margins that they report. But at the same time, the things in terms of earnings estimates have improved over past 1 to 1.5 years. So these are the 3 key variables that we have to watch. And I think, in a sense, the equity markets are today being governed by the currency markets. Until and unless the currency market stabilizes, it would be unrealistic to expect a degree of calmness in the equity markets.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.